Good morning, everybody. Hope you had a great weekend. It was really nice here on Sunday. We got back up in the mid-70s, and they're teasing us with a forecast for 80 today and then 60 tomorrow. But moisture's supposed to come in this week, and we sure need it. Okay, I'm missing data from 3:46 till about 6 a.m. Central Time. That data will not be available until tomorrow on the rebuild. So that's the way it is. The market right now is at 27.5. The 18, 15.5, 14, and 12. So we got pretty good resistance at 12 to 16 right now. And that would make the desired sell 11 to 15 if we can get it there. Stops above the overnight session high is what we'd be looking for, the 19 to 23. And we have news today that could change things, industrial production, and the macro news has been coming in less than forecast. On the buy side, basically 28 to the buck. That's where we are, and you can see on Friday that the last rotate down stopped at 27.5. So our buy zone, you look at where we rejected prices, is at 3, and my guess is that we might have industrial production less than forecast. So buying against the buck, letting them get stops against that would be pretty nice, but we may have to put 5. So I'm going to put a question mark at 5, and then we'll put 29 to 25. Biggest news this week will be the FOMC announcement on Wednesday, and everybody's looking at the word patient. Patience. All the news algos will be triggered for that one word, and we could get a huge move off that. Until that comes, though, it tends to freeze the market. So today, the news will be centered on Empire Manufacturing at 8. Industrial production will be next, and this will be the big number, plus 0.3. These numbers have been missing. Now, we're already seeing it's being blamed on the weather, and that expected rebound comes second quarter. Capacity utilization, no one pays any attention to it, 79.5. Never a factor until inflation. The Fed's raising interest rates to fight inflation. And when it gets over like 82, they start worrying about capacity constraint-driven inflation. NAHB housing, 56. That's pretty much where it has been. National Association of Home Builders. And then after the market closes, long-term capital flow at $27 billion. That number could come in higher because of all the economic unrest. So number one focus will be industrial production because that comes out after the Empire Index. Number two focus will be the Empire Index. But everything is probably on hold until Wednesday because of the FOMC announcement. Stock markets are up around the globe because of China's Lee's pronouncement that if it looks like their economy is going to experience problems or growth problems, that they will step in and make sure that that doesn't happen with government support for the economy. And nothing's changed. Quantitative easing is driving the markets. Our 1 to 5 buy on the note, I'd like to get it done closer to the buck, let them get stops below 127.5. So I kind of see a trading range imposed on the market, self-imposed, due to Wednesday's FOMC announcement. Today's news focus will be the industrial production number. Okay, looking at the 30-year, we've got, again, when we look at where resistance is, the 24, 28, 18 to 20, last rotate up was 15 to 16, then we have the overnight. So this 12 to 16 will be the first, and then our 24 to 28 would be the second. So 11 to 15, and it may take a, right now based on the structure, depending on where the news goes, my feeling is that industrial production is going to come in lower than forecast. It doesn't mean that it will, but that's just kind of my, so I want to hold out. So we'll put a question mark at 7. And then on the buy side, I'd like to get it in at 21 to 17. And then 9 to 13 for buy 2. First piece of news, Empire Index. Okay, Putin has come back from incognito wherever he is. The rumors out there, seeing the birth of his love child, to facelifts, and who knows. But when he did come back and make a public appearance, he's started maneuvers on the Europe's borders to show that Europe, that his military is ready and able to take on any contingencies that the West might throw him. So, I mean, that's just where we are with him. So maybe he should have stayed incognito as far as Europe is concerned. Okay, my guess is we're in a trading range. We're bounded on the upside by the 65 to 70, certainly 75 to 78. And on the downside, we got pretty good support at 50, so 50, 52. On the gold buy, and then on our sell, stops above the overnight session high, 63.65, sell 1, 69 to 71, sell 2. Let them get stops above the overnight session high. Obviously, that's a ways away. And then 45, 47 for buy 2. I see a trading range here. FOMC will affect it a little bit, but not like other contracts like the note, the bond, and the E-mini. And if the Fed removes the word patience, both of them will sell. The E-mini and the note should sell off of that. And people wonder why the inverse relationship isn't true 100% of the time. It's that when the Fed raises interest rates, it hurts both stock markets and the financials. And when they're going to keep them where they are, it helps both of them. So no magic there. Okay, the euro has come back pretty nicely. The second Austrian bank has gone down, been taken over by an agency that handles banks that get in trouble. And the euro's got a pretty good buying below 105, and we don't know exactly where the selling is. So we've got this spill that took us from 105.75. We've got this single print up here at 80. So here we are at 45. So we'll make 65.75 sell 1, and 90 to 106 sell 2. On the buy side, we have a London low of 105.10. We're currently at 44. Last rotate down in London was 23, so 20 to 30 buy 1. Right in here in this high volume area, it's a pretty bold trade, buy 2 against 105. So selling against 106, buying against 105 are the trades that are easiest to see. But you got to move a bit to get there. Crude oil. What's going to be interesting is when all the above ground storage is full and the people that desperately need cash flow have got no place to go with their crude oil. So that's going to be crunch time in the oil patch. Definitely we like the sell side. Why? Because there's too much production for demand right now. We've got London's high at 59. We're currently at 36, so our first sell is going to be 50 to 75. And then 45 even, a round number to 25, stops above 45. On the buy side, 43.50 to 75, buy one. And then 43, 43 and a quarter for buy two. Do like the sell side better. When it started to move, we've had no trouble getting to our second sell zone. So I don't know what would make us move quickly this morning, but don't really always need a reason in crude oil. Okay, China's market is up off of Chairman or Premier Lee's commentary that if growth of the Chinese economy becomes a problem, they will do any and everything to prop it up, and that usually is through public works projects. Kind of like Japan's. You know, Japan has basically covered its country in concrete. That's how they've all the economic woes and kept their economy going. So we are. So 50 is a round number, and we're here right now. Monday's rotate up was 56, so 54, 56. Going to hinge on the industrial production number, and then 59.61. And I think industrial production could come in less. So Empire Manufacturing Index plus 8. Industrial production plus 0.3. The economic related numbers have been coming in. Capacity utilization, no one pays any attention at 79.5. NAHB at 56. It's been their default number. So number one is industrial production. I think that one could come in less. So that's my best assessment on that, and we'll see if that happens to be the case. 45, 47, buy one. 40, 42, buy two. Down to this morning's industrial production number. And given the strength in the rest of the world's stock markets, I think we'll probably trade up earlier rather than down. And you can see that 60.62 is where current resistance is. Take at least 20 minutes to get everything up, given all the holes in the data and the rest that I had. So I'm going to get busy on that. I'll be back as soon as possible.